Okay traders, so on to the next category of videos mapping the trend. So with this one, it's all about trend lines and the different uses we have for trend lines. Firstly, this video I'm going to be going through general rules, how to actually draw a trend line on there, relating it to what we've done so far. So as you can recognize right in front of us here, we have the Aussie dollar chart with all of the fresh key levels on. So yesterday was non-farm payroll, and as you can see, the daily Aussie, we spiked all the way up straight through the weekly resistance, but then boom, closed below the weekly resistance. As you can see, price structure here, we can maybe spot a few lower swing highs. Okay, so what this video is about, more or less, is what to do once you put the key levels on there in terms of mapping the overall trend. We can use trend lines for this, and we also want to go ahead and highlight the price structure. So we want to highlight some of the higher highs and higher lows. So let's get started. Now, Aussie dollar, we've already mentioned on the last video, in the last section, we had a little bit of a analysis breakdown where we went through the shooting star and what we're seeing at 0.7750 and so forth. We actually found dead on support, as you can see here, 0.7493. Brilliant area of support there. So it's support, resistance, support. We pulled back from that support and we pulled back and we spiked straight through the weekly resistance, but we could not close above that weekly resistance. Okay, so at one point it was support at the top of this daily candle, and then boom, we've closed more or less 25% of the overall up move, which still to me suggests weakness, that we couldn't sustain the highs of momentum there. So this could easily roll over into the coming week. Now today is Saturday and we had non-farm payroll yesterday. So what I want to do, excuse me, is I normally use to do this the ellipse tool, this one, circle tool. It's quite fiddly at first, so I do suggest zooming in a little bit and just drawing one. Make it any color you want, but that's fine for me. So we want to get one, and we want to more or less go and put it around the last few lower swing highs and lows. So sometimes you're not going to be able to get it dead on, so you can use this, or guys, you can go ahead and you can use maybe the rotated rectangle, might be a better shot. So this rectangle here, it's a lot easier to use. We can just highlight that there. So we know this is, right, so what we actually see here is we have the higher highs, higher lows, higher highs. This could be a higher low because it's a 3-pin formation, 1, 2, 3. It's also an evening star candlestick formation on support, and it's also a higher low in comparison to the higher low that we're seeing over here. Okay, with this huge wick, which we could maybe even class that, or even this 3-pin pattern as a higher low, but this whole entire range is a higher swing low in comparison to the one prior to that. The higher high would obviously be up here, so it's good to just maybe mark on 2 or 3 starting on the daily time frame. Weekly time frame, it is good as well, but we can get a little bit confused because now on the weekly time frame, what I can see on the Aussie on the bigger picture is these. So we have 1, 2, 3, we have 1, 2, 3, and then we have 1, 2, 3. So and then here as well we have a tweezer top here. This is a tweezer top, so lower high, lower high, lower high, lower high. So we do have this lower high formation, which could maybe push Aussie down overall back into the 6,800 region, to make new lows on a weekly. But remember, when we're mapping the trend on a weekly time frame and weekly basis, it's not going to come through in a matter of just a few days. So the daily time frame is going to be the most immediate, and maybe the 4-hour as well. Now, what can often happen, again, when you do zoom down, the boxes can be a little bit big. This is something that you're just going to have to work on as you go along in perfecting your analysis. So even if we could, let's say, make our boxes this, okay, nice and small. Get rid of these ones for a moment, but it's just an example for now going forward to allow you to think about this process and this method, because it's something that's very important. So we had the lower highs on the weekly, and I do suggest, guys, instead of maybe congesting the chart, or you can congest the chart for now, take a screenshot of the chart. So let's say we went onto the weekly time frame. You can put the boxes around these levels, Or you can go and you can write on there LH, obviously not in size 24, maybe like size 14 or something. So we've got lower high, got a lower high here, lower high there as well. So on the grand scheme of things, remember the market will follow the overall bigger picture. Lower high, lower high, lower high, capped by 7,750. So just straight away looking at this now, you can now see how the key levels bring this into proportion, so you can actually take time to consider this price action. So lower highs, we have a shooting star here. Last week we closed as more or less a doji candlestick. It was indecisive. Moving averages, we can just take away the candles for a moment. The blue and red, they're not ready to cross over just yet. But yeah, this 7,750, as long as we're below this on the weekly basis, we can in fact push a lot lower. So that's something to consider. Now, with this being said, just move these out of the way for a moment. If we look at the daily, okay, we have this. This could be a high or low in comparison to this one here. But again, on the 4-hour, we might have a little bit of a conflicting basis. So which one do we go with? I recommend, guys, going with the. We need to more or less match 2 time frames up. So we have lower highs on the weekly, and then I've just spotted over here as well. I can clearly see a set of lower swing highs. So when you draw your rectangle, just draw one, copy and paste, or clone that one, and then add it onto the others, okay? Just to keep everything nice and neat and organized. So here we can see lower swing highs as well. Now, if we match this with our weekly perspective, we've got the overall lower swing highs. The daily is putting in a higher low at the moment, just here on this support. However, that can give way. As soon as this gives way, as soon as the last higher low gives way on the daily time frame, or on this, or in this structure in general, that means the trend is reversing. So on the instance of bullish down to bearish. So once this level's taken out, we are in fact back in bearish territory. But there's something else that can help us with this greatly as well, which is the trend lines, which is what this video is about, giving you an introduction into that. So once you've done this and had a play around, and you've looked on just on the weekly, daily, and the 4-hour, don't use any of the time frames for this. In my opinion, just because of the style we trade. Obviously, you can find the structure on all time frames, but the style that we're trying to stick with, the medium-term swing trading, these are the time frames that we are going to be using. So we see these lower swing highs. Now, this last lower swing high was triggered by non-farm payroll, right? So what we could see on the Aussie dollar is a rollover down to take out the 7493 into the 7400 region, which is the monthly support. So again, look how clear this looks. This is very, very clear, and this is what we need. We need simplicity, as simplicity is key going forward in this market in order to read the price and get an overall gist of where the market is going, heading to, and just jump on the overall direction. So Aussie is a nice pair going forward. We can see 166 potential pip downfall on the Aussie in the next, maybe even week, the coming week. So what I'll do then is, once I've made some notes, made some screenshots, I'll start back on the weekly time frame, and I would go ahead and use a trendline tool. I'm going to put up a blank chart for this. So if I go to, let's have a look at the Euro USD. It's not the best example in the world. I'm just going to show you the actual structure. So when we're drawing trend lines, we just want the trend line tool, and we're more or less, okay, before I use this on the Aussie, we're going from wick to wick, so let's say significant low, and once we've put the trend line on there, as you can see, we can drag it along and around. Now, time frames for this, we do not do this on the monthly time frame. We're going to be doing this on the weekly, daily, 4-hour and 2-hour. 4-hour and 2-hour. 2-hour in particular, we're going to be using the counter trend line, which is going to be in a later video. It'll be the last video in this section. But to map the overall trend and give us an idea as to which bias we need to attune ourselves to, we need to go ahead and use this on a weekly, the daily more so. So this is the daily time frame on the Euro USD, and all we need to draw the trend line are 2 points, our first 2 points. Many people often get too confused with trying to line up trend lines they cut through and beyond all of this nonsense like this, all over the place, cutting through the charts and then just lining up wherever they just think in their head suits. There's actual rules to this, and if you get the rules right, everything else falls in place. So the Euro USD, I know off the top of my head that this area here, 1.0500, is a monthly zone of support. So we're looking at the regions of once we've broke the market up, especially on the Aussie, it'll become clear on the Aussie dollar at the moment, we can actually use those regions in order to plot our key levels of support, resistance, and also then go ahead and plot our trend line on there as well. So I've gone from point 1, and many of you may be thinking, okay, you've gone from point 1, but why haven't you chose maybe this level as point 2 here? Well, in fact, before any of this price action occurred, I did have a trend line on that point there, right there on the 3-pin pattern, 1, 2, 3, and we've seen the spike through and so forth. But looking back historically, you can go and adjust your trend lines as the price action actually plays out, and this one fits and suits better. So it's all down to trial and error. With the weekly breakdown videos, I'm going to assist people with the trend lines as much as possible, because I know it can be a little bit fiddly at first, but I learned this by continuously saving my work, journaling, saving all of my chart work, and also coming back to it to see how it played out and so on. And it's always, guys, going to be at the wicks. So wick. Now, on the Euro USD, I can see that we had a breakthrough of this trend line. Okay, price has gone back into consolidation because I know across here we've got weekly area of support as well, and we've retested the trend line as resistance. So just remember, the reason why we come and do our trend line straight after key levels is so we can put on this dynamic area of support and resistance, because that's all it is. So when the price was above it, it was support, and now it's retesting the zone as resistance over here, which you can clearly see. Another factor to take into consideration is the moving averages and how they cross over. So as you can see, they crossed over, then we had a breakout. This is in the book as well. I'm probably going to pull this up later on in this section on another video about how to combine the moving averages with the trend line bounce, break, and so forth, and mapping out the overall trend direction. Another trend line that we can maybe place on would be, this is going into counter trend lines a little bit, but something like this. So I would say to myself, okay, Euro USD is looking quite bearish at the moment on various time frames, but we broke one daily trend line and we're ready to maybe come now down and break this trend line. If it does break that, I could say Euro USD may end up back down at 1.0500. But we'll get into the nitty-gritty fine detailings later on. So that's just how to draw a trend line. It's always the first 2 points on the wick as neat as possible, and we extend it into the future. So I'll show you how we can get down with this on the Aussie dollar. So the rules, there's trend line bounces and trend line breaks. The trend line bounce and confluences, I'm going to go through that in the next video. So I'll mention a few of it here, but I will go into further detail shortly, so don't worry. So here on the Aussie dollar, we can see that we have the series of lower highs, even this peak here. Now what we can then do is once we've spotted the lower highs or higher lows, whatever trend we're in, we can use these peaks to actually go ahead and draw trend lines. Okay, so we can see this one here, and what I've done, I've took it from point 1 to point 2. And I've extended it, so we have a point 3 here and even a point 4. And each time the market has come up to it, the actual raw price of the candle has not been able to close and maintain above. So we have a trend line bounce here. A break would be if the body maintained those highs and stayed above those highs. Then you could say, okay, that trend line is more or less breaking soon. There is a reversal in place. So we were under this, making lower highs. If we get a break above it, then that tells us, simply put, let's say on a weekly or daily basis, that the market is now ready to reverse and reverse the direction in total. We have that one there, and we can also draw up to 3 inner, outer, and long term, which I will get to in a later video. But what we can do, we can draw a few on there and see what fits best. And to be honest, the one I put on, well, both of them fit very, very nice, but it's still displaying the same thing. So we've gone from point 1 here to point 2, extended it, got the third point over here. So I've just left this one out, but both of them fit quite well because at the end of the day, none of these weekly candle closes and none of the price action on a weekly basis could in fact pierce beyond any of those trend lines. So I'm going to go with the first one that I plotted on. So that's cool. So trend lines can assist us in various ways, and one of the ways is to help us define a potential break and reversal opportunity. Not to say we're going to jump straight in, so don't worry about entries right now. This is just for guidance. And also, as we see here, it can guide us on the way down. So as long as we're below this trend line on the weekly basis, Aussie dollar is not bullish on a weekly basis. On the daily, yes, it can be bullish, because if we go over to the daily, you can see the price structure recently. It has been giving us bull runs, but it's been giving us equal bear runs too. All right, and as you can see here, it gets a little bit messy as we go down. So what I tend to do when you live all of these currency pairs out, especially at weekly trend lines, maybe even some daily ones, at the labelings, what I did recommend is do the labels, save your chart, put it away. But you will get to a point in time where you can actually do all of this in your head, and it becomes very, very simple. So this trend line here, I know of it, it's in my head, I'm mindful of this trend line, but I'm not going to leave it on for the sake of keeping my analysis clean. If we do get a breach back above, I don't know, anywhere around here, subconsciously I will think about that trend line, I'll plot it back on to see how the market is performing against it. Now, daily time frame, more or less, so the time frames for this, again, I've mentioned, are the weekly and then the daily. If you can't find anything on a weekly, do not force it. 9 times out of 10, you'll find 1 or 2 on the daily time frame, and we don't need to go mad. I've seen some crazy charts on social media recently, and people just do not have a clue about trend lines and how to really respect them. So what we want to do is look for areas where we could draw a trend line here. So we've already seen the higher highs, higher lows, and once you plotted your boxes on or your circles, it makes it very, very simple. So we could even go from boom across here. That is a valid trend line. It's a valid trend line right there. Okay. However, before this one, so this could be like our outer trend line. So if the market breaks through this and the monthly region of support there, because we've got more of a crossover and confluence, if the market breaks through that, I reckon that we could see the second point over here quite soon. If we could get a break through this, we could come all the way back down to 6,800, as I mentioned, because that would be our second target. That would be our first target if this trend line does in fact break, something like this. So we'll break straight through. That's where we'll be heading first. We might bounce back from that. Something like this. Perhaps throw some Fibonacci in there as well, which is coming up in the next section, and so forth. Okay, to make those new lows, even if it's just by a few pips, because that could fulfill what we were talking about in the weekly. Okay, weekly lower swing highs, ready to come down and make a new lower low. Looking at this on a monthly perspective, monthly, the moving averages, remember they did cross over, but last month we still closed as a shooting star, and to be honest, this is just consolidating now. It really needs to just find its overall market direction. So we have confluence and interest here. We have lower highs on the weekly, however on the monthly the moving averages are crossed to the upside. So Aussie, it just really needs probably some kind of fundamental factor to give it its overall direction of buyer's drive and wants it again. So we need to just always mark our analysis into 2 segments. So what we had was obviously the trend line here, which is guidance, and the trend line here. So if we break above the higher end trend line, we could say, cool, Aussie's probably going to be bullish now, especially if it breaks above 7,750. If not, boom, we can break below this trend line and we can come to make new lows. So especially if you guys are starting off fresh in the market, once you've done all of the key levels and gone through the course, and then you have your 5 currency pairs up and so forth, and you're starting to really put the hours into study, always break up your analysis into alternative bias scenarios. So, okay, if this happens, it'll be bullish, this happens, it'll be bearish, just to start off with, to give you an insight into not really getting attached to a certain direction and just allowing the market to flowing with the market, and just taking your time in general. Okay, and just getting both sides of the experience, not sticking to one thing and thinking, yes, this must come through and so on. Right, so there was that trend line there, which I'm going to remove. However, the most immediate trend lines on this, so we had one from this point here, and I remember this one, probably on my YouTube channel actually. So I went from point 1 to point 2. You could have went from any of these points, to be fair. And then you can see the point 3 here, which is the bounce where more or less we look for. The confluence is the buy and sell, which is in the next section. And then eventually the trend line actually broke. So as you can see, the moving averages across to the upside all the way until we hit our key level. Because what's more or less going to happen, guys, is the market will flow in one direction. It might bounce from a trend line, okay? The moving averages might cross over. It might put in the higher highs, higher lows. But eventually it's going to hit one of our barriers and flop, reverse. It might go sideways for a while, or it might just reverse in quite a strict manner, which we see in here. And what you can actually see here is the moving averages then crossed over to give us an indication of momentum turnaround, turnover. Crossed straight over, broke straight through our trend line, and then we've seen a couple hundred pips decline. We found support, and then went for the same thing again. So next trend line would be from here. Now you could have went from this point here, so point 1 and point 2, or point 1 and point 2 right there. So just by placing, so you could go ahead and keep your last trend line on if you really wanted to. It's completely up to you. I sometimes do. On my other chart, it's probably still on there. But this is the most relevant one for me right now. As you can see, we've obviously put those two on there, and then we had the one from point 1, point 2 across there as well. If I just place that one back on, right there. Okay, so I'll remove this one just to aid from any confusion. So what we have here, guys, is we have an inner trend line, and then we have an outer trend line. And this is in the book as well, remember. I'll pull this up shortly on the trend line break video, third video in. So more or less, the inner trend line breaks, we're looking at the outer as our target. Outer breaks, boom, this thing's gone. So what we can see confluence-wise for maybe Aussie rolling over is that it could come down, and it could tap on our monthly support 7400, and it could also tap on our outer trend line. What it does from there, we have to sit back and wait. The moving averages are crossed over on the daily, they're crossed over on the weekly, however they're crossed to the upside on the monthly. The monthly can lag though, remember. So the daily and the weekly are the most important because they're going to be the most relevant. So in this case, we can actually see a potential for Aussie to continue its further decline. We had a break of the trend line, and what we'll often see in a trend line break as well is just before or slightly after or even at the same time. Again, this is in the book in the moving average theory section. The moving averages may cross over. So they crossed, and then we got the break shooting star. We broke through, found support, came back up to retest. So now it's evident that we didn't just only test the weekly resistance here, we also retested the back end of the trend line, just like we did here on the Euro USD. So this is known as breakout retest continuation. This will happen on 90% of the breakouts that will occur. Okay, so the market will pull straight through it, retest it, and then continue. The continuation only occurs when the initial low of the breakout, okay, the initial lows have been taken out. That is what you call the continuation. And this is what a conservative trader would wait for. However, we're not always just going to be trading from trend lines. Trend lines are old, sluggish, and they can lag. We're using these as directional bias because remember, you can't really trade to an accurate degree if we don't read the overall market in the direction in order to nail the trend, jump on the trend for the highest probability trade entries. So this is what we're seeing here on the odds. Let's see how this looks on the 4 hour. Okay, so the 4 hour time frame, Now we have the trend line break on the daily, the crossover on the daily, the lower highs on the 4-hour time frame, 1, 2, 3, 4, ready to potentially roll over. For a trade setup like this, obviously we can refine it on smaller time frames, like we could look for the daily highs, we could look for any kind of reversal. So market opens, it could maybe come and retest these zones, daily highs, before going lower. Or we could maybe get savvy with some counter trend lines, which are coming up very, very soon. Well, the last video in this section, which would be hold on, wait until the market comes down, the moving average crossover, we get a breakout through the counter trend line, and then boom, we could look for short opportunities, which I'm going to go through, and you'll know the counter trend line strategy by the end of this section. Counter trend line strategy is absolutely great for riding the trends, okay, sudden fast movements. So we'll get the break of the candle, the moving averages, boom, that'll be a short. Your stop has to go the other end of the swing though, and then you go in for the next key level of support or resistance. And this will happen time and time again. So more or less here, we're just cutting up the market. Okay, so I don't really want to confuse you with that right now. I hope that helps so far with putting on your trend lines. Remember, you just need the first 2 points. So here I've gone from point 1, point 2, and you just have to line it up, trial and error, lining it up. Do not congest your charts. Just look for 1 or 2 on the daily. You might find one on the weekly. Sometimes you won't find one on the weekly, but they can assist us greatly just by plotting this on accurately and properly. We can now see what's going on with the Aussie. There's a potential for this to go boom here, and then maybe even all the way back down here, trend reversal. Okay, so we get the trend line bounce, trend line break. This is a trend line break. Trend line bounce is coming up in the next video. So that's the examples. Okay, and a lot of this information is in the book as well, so make sure you read the book, save your befores and afters, and so on. So on to the next video. Highlight your price structure, look for trend lines, daily, weekly, and combine that with the factor of the moving averages.